Let's talk about escrows, mortgage escrows, and how they are set up and established on new construction. So, in other words, escrows on new construction explained. So, if you're not going to have an escrow account, you're going to pay the taxes and insurance on your own. You can ignore this video. It's okay. You don't need that. But for those of you that are going to have an escrow account on new construction, here's what you need to know. So, and again, I'm in Texas, but it holds true. I mean, some of the details might be different as far as when taxes are due and posted and things like that. But at the end of the day, this is applicable to anybody in the United States. So, when purchasing a home and closing on the home, if there's an escrow account, the escrow account is regulated by the federal government. So there's a fancy formula that says, like, to the penny, here's what can be collected, or this is what has to be collected to set up an escrow account. Now, what changes is the values used for property taxes. And here's why. Property taxes, we don't know what the tax bill is going to be on a newly constructed home. So in Texas, for example, the valuation for taxes comes out in February or March. So if February or March, if there was a piece of dirt in January, and by the time the valuation comes out from the appraisal districts, let's say it's a piece of dirt with maybe a foundation, they might give it a value of $50, $60, $70,000 total. And that'll be that year's tax bill. So that at least that'll be what the valuation for the tax bill will be based off of. Even though, let's say the house gets completed in June and it's a $500,000 home, that's what the real tax bill will be calculated on, is that value that gets assessed in that February, March time period. So when setting up new construction for us, the mortgage mark team, what we recommend is setting it up on the big value, the 500,000. Because yes, that first year, or in this case, when they close in June, that second half, so this, the second half of the year they own the home, technically we will be over collecting on the taxes if we go off the big value. But ultimately, that sets up for success next year, because next year and the years beyond, it's obviously going to be based on the big $500,000 example, or number that I'm using in this example. So in doing that, we don't know the exact valuation that the appraisal district's going to give. We also don't know what the exact tax rate will be when they do post in October. So what we do, and most lenders I think probably do this too with new construction. I don't know. Obviously, I don't work for every lender, but what we do is we use 80%. If it's a homestead, if it's a property that somebody's buying to live in, there's a homestead exemption, which allows folks to get a reduced tax rate. Matter of fact, we'll put a video somewhere around here about the homestead exemption to make sure you file for it. So for that reason, when it's a property that somebody's going to occupy as their homestead, we will do an 80% calculation on the value for tax purposes. So in other words, on this $500,000 home, they're buying it for 500 grand from the builder. We will then use a 400,000, 80% of that 500. We'll use a $400,000 valuation for the taxes and then multiply that by the tax rate, the existing tax rate. And that's what we'll use to set up the escrow account. So with new construction, because a lot of those things are moving parts, we don't know them. We're taking our best guess. We're trying to get you close, but absolutely expect some sort of adjustment the following year as far as what, and even the year after, and it could take literally a year and a half to 2 years before all that shakes out to get kind of set to normal. But the way we do it should mean where it's little tweaks and not just a big punch in the face, like, oh my gosh, it's like gone up immensely. So with new construction, again, we try to set it up on the high value. It's your choice technically as a borrower. If you're buying the home, you can pick whether you want us to do the big valuation. The downfall of the way we do it is that it does require more money at closing because it sets up a bigger number in the escrow account. That extra few bucks that is going to be due at closing is absolutely worth it, in my opinion. I'll put a thing to explain why taxes, a lot of folks get, caught off guard on their property taxes when it comes to new construction. I'll put a link somewhere in here about that. But we absolutely recommend doing it off the higher value to avoid some big significant pay increase later on. So that's what we recommend. If you have questions, if you want to let us know, certainly do that. Check out, like I said, I'll put other links about escrow shortages, because that, doing it off the lesser amount will absolutely create an escrow shortage. I'll put some other links around. And if you have questions, call the Mortgage Mark team. We're absolutely here to help, take great care of you. And as always, when you think mortgage, think Mark.